All right, everyone. Thank you for stopping by and saying hi and coming to this presentation today. My name is Lan Turner, and I want to thank Eric and Josh, the guys here at Cyber Trading University, for inviting me over. They are a couple of wonderful guys, and if you've got the opportunity to learn from them, you're learning from the best. So I appreciate again the invitation to come over and to work with you guys. They've asked me a little bit if I wouldn't introduce you to a couple of new concepts or a couple of interesting concepts. I wouldn't say they're new, but some very interesting concepts that are kind of a little known concept. And maybe I can introduce you to something you haven't seen before. And that's my hope, is to try and teach you something that maybe you haven't seen that you can use in your trading and start applying what I might say immediately. But before we get started, I would like to quickly just introduce myself and explain why you should maybe possibly pay any attention to what I'm about to tell you. This is not to brag, but more just to let you know who you're listening to. Again, my name is Lan Turner. First and foremost, I'm a 23-year trading veteran. I'm the chairman and founder of Gecko Software, a 19-year-old financial software engineering firm. I'm also the founder of Gecko Financial Services, which is a brokerage firm, and TradeMentors.com, which is my education site. And that's kind of the core of my institutional side. Besides running my trading companies, I've spent much of the past 10 years teaching my unique trading ideas and concepts to clients and professional traders and brokers from around the world. And during that time, I've had the good fortune of being invited to present at the Chicago Board of Trade and the Chicago Mercantile Exchange centers on multiple occasions. And I published several books and recorded numerous videos and boot camp courses in an effort to share my knowledge of trading with others. And I've been invited to teach these investment classes and courses at several colleges and universities. So now that we've got the formalities out of the way, I just say let's jump right into it. We've got a very short amount of time and a very long time to get there, or a very, very short amount of time with a long way to go. Today I want to introduce you to reoccurring price patterns. All right, now hold on before you all leave the presentation thinking, oh, you know everything there is to know about reoccurring price patterns. I want to assure you I'm going to show you something that you've probably never seen before. So I would recommend you get a piece of paper and a pencil, because you're going to want to take some notes. You've all heard of these common patterns: the head and shoulders formation, 1, 2, 3, ABC tops and bottom formations, wedges, triangles, pennants, and so on, right? The recurring price patterns I'm going to show you here today are not these. But the reason I bring these very well-known patterns to your attention is twofold. First, to bring to your attention that we all realize markets have a tendency to do the same thing over and over again, right? It's these psychological events that continually repeat in the markets that cause these formations. And we call them setups. And then the breaking of the trend lines or the confirmations from one of our indicators is the technical trigger for market entry. Okay? It's very well known that the short-term trades are generally driven by the technical speculation in the markets, but the long-term trends are driven by the fundamentals, supply and demand. So by melding these two together, the technicals with the fundamentals, this is how we come up with a great 1, 2, 3 knockout punch trading system. Well, the reoccurring price patterns I want to introduce you to today are a little less well known than the head and shoulders formation or the 1, 2, 3 top and bottom formation, and a little less understood, but they come with a very impressive track record, something I think you're really going to want to see. How many of you have heard of these somewhat famous recurring fundamental price patterns? Sell in May and go away, seasonal sector rotation, triple witching days, the Santa Claus rally, and the January barometer. And these are just a few recurring price patterns that we call seasonal patterns, or recurring price cycles, or recurring trends. And you can probably think of several more that I haven't got on this list. If you've been in the stock market for any length of time, I'm sure you've heard of these famous recurring price patterns. What about these recurring price cycles and market trends? Have you heard of these? Have you heard of the John Deere rally? What about the Coca-Cola rally? Any of you ever heard of the July bean oil rally? Never heard of these infamous patterns? Well, these are the fundamental recurring trends in market cycles that I want to show you during this short presentation, along with several others. Okay, I hope you have your paper and pencil ready, because you're going to, here's the first recurring price cycle I want to introduce you to, and I'm sure you're going to want to write this down. We call this the DE rally, or the John Deere rally, because between this 24-day time frame, or roughly the 4 weeks between November 16th and December 20th, every single year, or 100% of the time, over the past 14 years, John Deere has risen in price on average 9%. Now that's pretty impressive, wouldn't you agree? Now think about that. Every single year for the past 14 years, between these two dates, November 16th and December 20th, this stock, John Deere, has risen in price on average 9% every single year so far, without fail. All right, here's an equity chart of the DE rally, where each bar represents a year. So far, since 2003, not a single losing year. All right, you want me to back up and let you write that down again? The DE rally between November 16th and December 20th, every single year, 100% of the time, over the past 14 years, 9%. So that's December 16th and December 20th. All right, let's go on. Let's look at another one. Now, first of all, I'll be the first to tell you that past performance is not necessarily indicative of future results, right? We hear that all the time as government disclaimer. Just because John Deere has risen in price 14 times out of the past 14 years during these two dates without fail does not necessarily mean it's going to do it again this year. All right? But you got to ask yourself, what stock am I going to be having my eyes on come November 16th? Trust me, it will be John Deere for sure, absolutely, right? All right. Okay, I mentioned the Coca-Cola Rally earlier, so let me show you this one real quick. You'll want to write this one down too. We call this the KO, or the Knockout Rally, which of course is also known as the Coca-Cola Rally, because between the 2-week time frame of March 22nd through April 3rd, every single year, or 100% of the time over the past 10 years, Coca-Cola has risen in price on average 3%. Now that's pretty cool, isn't it? But if you think that's cool, take a look at this. It's not just Coca-Cola that made that reoccurring trend, or makes this reoccurring trend, because we see this almost exact same seasonal pattern in Pepsi-Cola as well, which is exactly what you would expect to see if this was any kind of legitimate pattern, right? Between the 4-week time frame of March 20th through April 18th, every single year but one, which makes it 90% of the time, over the past 10 years, Pepsi-Cola has risen in price on average 4%. Right? Between March 20th through April 18th, 90% of the time. 90% of the time. It's pretty amazing. All right. The mystery here is not so much let's see. The mystery here is not so much that it makes this kind of recurring price pattern, but I think the big question is why? Why does it do this? Now, before we answer that question, let's take a look at one more recurring seasonal trend. All right. In the futures industry, we have a saying, knee high by July. This saying is specifically in reference to corn, which we use as a crop guide on how well the crops are doing this year. Corn, wheat, and soybeans. If corn is knee high by July, then we know that the crop is on track and where it needs to be, and the other crops, wheat and soybeans, should follow suit. Now let's just for a minute take a time out and think about these reoccurring price patterns and why they continually occur year after year after year. We see these reoccurring price patterns in all 4 markets: stocks, futures and commodities, and Forex. But I think it's easiest to understand why they occur by talking about the traditional commodities market. Okay. If you ask a farmer when the price of corn is at its lowest price, he will inevitably tell you that it's at harvest when he has the most corn on hand. This makes perfect sense, right? It's a simple fundamental supply and demand question. Wheat or soybeans as an example. We plant them at the same time every year. We harvest them at the same time every year. They're susceptible to damage, too much water or not enough water at the same time every year. Transportation costs, storage fees, all at the same time each year. It's easy to see why we have annually reoccurring seasonal trends in the commodities market. So let's take a look at a famous reoccurring seasonal commodity price pattern, and then we'll circle back around and we'll talk about why these types of events are seen in the stock market as well. This recurring trend is called the July bean oil break. And I wanted to show you this one in particular because it's bearish, or is set up for a short position trade. The other trades have all been bullish or long trading positions and in anticipation of higher prices. But this trade is a trade where we see a fall in prices. Think about it. If corn is knee-high to July, or knee-high by July, that reflects positively on the grains market, soybeans included. Therefore, we should see a nice bumper crop of beans, right? Which would put its selling pressure on bean oil, which is the retail derivative of beans. So here we go. Between July 14th through July 27th, 93% of the time, or almost every single year over the past 14 years, all the way back to 2003, bean oil has dropped in price on average 104% ROM, or return on margin. Since we're taking a short position and we trade commodities with a margin account, we count that as a 104% ROM, or 104% on our return on margin, on our margin amount. All right. Here's a graph for bean oil. Again, each bar represents a year. So what we're seeing is consistently bearish downtrends year after year after year, clear back to 2003. The only down year we've seen is 2010. And actually I say down year, but that's actually the only year bean oil prices actually rallied bullish, losing money if you had taken a short position. Every other year, bean oil had dropped in price. Again, no guarantee that bean oil is going to fall again this year, but it's one market I'll have my eye on, that's for sure. Okay, we talked about why these recurring price trends happen in commodities, which I think is easy to see and understand, right? But why do they happen in stocks and in Forex? Now, we haven't yet talked about Forex, but we will. We'll take a look at at the Forex market next. Can you think of recurring events in the stock market that might cause significant recurring price patterns to happen year after year? I'm sure you can once you start thinking about it. They're pretty easy to identify. I mean, we have holiday seasons. We already mentioned the Christmas rally. What about tax season, quarterly earnings, reports, and scheduled dividends? What about annual board meetings? And the list goes on and on. It's the fundamental buying and selling pressure that each different stock or sector falls into at the same time each year, year after year. These fundamental events are what causes these recurring trends and market cycles to exist, and there are a lot of them. All right. All we need to do is find a way to discover and identify them so we can trade them, and that's what I'm about to show you how we do that here in just 1 minute. But first, let's take a look at the Forex market, and then I'll show you how I locate and find these different opportunities myself. I call this the June EUR-USD rally. Not the fanciest name, but it gets the point across. Between June 28th and June 30th, again, you're going to want to write this down, between June 28th and June 30th, 100% of the time, over the past 11 years, this Forex pair has rallied on average 43%. Again, that's 43% return on margin. Now you'll notice something about this trade, a little bit different from the others that I showed you. This one is only 3 days long. All right. Most traders, including myself, day trade the Forex market. So I like to look for these short-term spikes in the market so that I can day trade them. Think about it. If EUR-USD has been bullish 100% of the time during the past 11 years between June 28th and June 30th, and I get a sell signal from my favorite day trading indicator, do you think I should take the trade? No, of course not. Logic alone tells us we should not be taking short trading positions during this 3-day period. What if we receive a nice buy signal during this same time frame? Maybe we should load up, right? Maybe take a larger risk than we might otherwise take. Having this additional information gives us what I like to call an unfair advantage. Okay, I hope you're starting to see the power in knowing when these types of recurring price trends and patterns occur and how they could potentially help you in your trading. Can you also see the disadvantage you're at if you don't know these patterns? Do you know if you've ever actually traded against one of these major prevailing trends or not? Maybe you have and you didn't even know it. What's Donald Rumsfeld's famous quote? Most of you are familiar with this. There are known knowns. There are things we know that we know. There are known unknowns. That is to say, there are things that we know we don't know. But there are also unknown unknowns. There are things we don't know that we don't know. That's how I feel about these fundamental recurring price patterns. Most traders are trading against a 10-year, 15-year prevailing fundamental trend, and they are completely unaware of it. So I've just moved your knowledge of these fundamental patterns from your unknown unknowns category to your known unknowns category. Now it's your turn to put them to work for you and move them into your known knowns category. All right. I know that's kind of a mouthful, but I think you get my point. Excuse me. Now I could go on all day. I've got so many of these, it would take me a week to show them all to you. All right, there's a lot of them. And at this point, I could probably offer you a $1,000 a year newsletter subscription service full of these trades, and it would probably be well worth the money. But rather than me subscribe you to some newsletter of high probability seasonal trades, how about I simply show you how I find them so that you can find them yourself and not have to rely on me or anyone else to provide you with this information. I think that's a better idea, don't you? What's the old saying? Teach a man to fish, right? Show a man to fish, give a man a fish. All right, I would like to introduce you to TradeMiner Pro. TradeMiner is a market research software application developed for the purpose of finding these exact recurring market cycles and trends or fundamental recurring price patterns, just like the ones I've been showing you. TradeMiner had its results published in Barron's Weekly, Futures Magazine, Stocks and Commodities Magazine, Investors Business Daily, and Pitt News Magazine, just to name a few. So how about we take a few minutes? I'm going to pull up the software, do a couple of live scans for you, let you see TradeMiner Pro in action. So stay tuned, because I think this is something you're really going to want to see. All right, now if I can switch this over, try and get track and trade to TradeMiner. Okay, this is the stocks version. Can everybody see that? All right, here's the stocks version. Now, if you notice, if you look across, it's kind of small on the screen. I wish there was, I don't know if I can zoom that in or something to make that bigger. Hopefully you guys can all see this. But up there in the left-hand corner, you'll see there's a series of tabs. There's a search tab, there's a neural network tab, there's a portfolio tab, accounting tab, trade alerts, settings, and education. All right, Bill saying he can see it, Pamela says she can see it, Jim says he can see it. All right, good. What we've done is we've designed this very simple. We put it in a paragraph format, so all you have to do is just come in here and you say search for trends in the month of, and I've got in here June. We could come in here and look for next month. Let's go into July. And if we wanted to, we could do individual symbols. We could put a symbol list in here. and we could come down and we could just choose any symbol we want and see the seasonal trades that are in any individual symbol if you got a favorite stock you like to trade. But I like to do month because I want to know which stocks, in this particular case stocks, we got the futures and the Forex, and I'll show those to you in a minute. But this is the stocks version, and I would like to see any stocks, see if there's not any seasonal fundamental patterns that are going to reoccur in the month of July. And we're going to find trends that have won at least, and I've got in here 90%. We can turn this down to 80%. We can raise it up to 100%. Whatever you kind of feel comfortable with. And that's the whole idea. This is all user definable. And then you come in here. So we're going to find trends that have won at least 80% of the time. Now it's at least 80%. So it'll show 90s and hundreds if there are any, but it will show at least 80% of the time showing. And I've got down here, we got both bullish and bearish, so you could do longs and shorts. A lot of people in the stock market like to buy put options, right? So you could do bearish, but I'm going to put both in here for longs and shorts. And then we list trends that last at least, and we can come in here and we can put an envelope or a window. Sometimes you might like to trade longer term trends. You might be a long-term position trader and you say, oh, I'm going to go 30 or 60 days long, or you might be a short-term trader. Oh, I don't want to have any trends that are any more than 2 weeks long or a week long, depending on what your trading strategy is. I'm going to come in here and say I don't want anything less than, let's say, 7 days, and we don't want anything more than 30 days. So we can do 31 days. Maybe it's a whole month. And we're going to find at least 10 years of history. Now, again, this is at least 10 years of history. So it's got to be 80% profitable within at least the last 10 years. It doesn't mean it can't go further back than 10. That's just the least it's going to do. And then we got down here, we got a couple of filters that I'm just going to leave checked, which remove some of the overlapping trade dates, because you get some that overlap. So let's just clean those out of there. And I'm going to say search now. And we're going to watch this just for a second. I want to tell you, you can see the little green line going across there. When we first developed this software, we would hit that dig now button or that search button. We'd go home at night and come back in the morning, and it would almost be done. So as you can see, the technology has come a long ways from when we first started doing this. And we were doing this for ourselves. We did not release this to the public for a very long time. And there's a story about that, and maybe at some point I'll get into that for you and tell you the story about why this was privately held for 10 years before we actually released it to the public. And it's not been out on the public very long. It was tied up, just quickly, it was tied up in some contracts for some very huge, large firms that were using it, and we weren't allowed to sell it. But what we're seeing here, we've got 760 results. That's pretty good, right? 760 opportunities. Now, because there's so many of them, there's ways to filter them out. You can, of course, come back up here and change this to 90, and we'll only go and we'll do the search again. And you'll notice how fast that time, again, we've optimized it so when you do your second search on the score or on the field, it comes in much more quickly. It keeps learning from itself. Let's go back to 80 just for fun, because I want to show you some stuff here. And so here's the 80% out of the last 10 years. Now we can sort on any column in here. We can come in here and say, I want to bring the winning column to the top. So you just click on the header column here, and it brings all the 100%ers to the top. Now see that 100%er right there? That's Under Armour Inc. How about that? Look at Under Armour. Between July 3rd and July 25th, get your pencil out, write this down. Between July 3rd and July 25th, 100% of the time, over the past 10 years, that's 10 years in here. How many calendar days? That's how many calendar days, trading days. We got in here almost every statistic you can imagine. If we come across here, I slide across, you can see almost every statistic you can imagine. You can bring the ones that are most important to you up front just by simply sliding them. And maybe you want average profit to be up front. You just slide it up to the front like that, and it'll show you the up front side. And then you'll notice down here, down the left-hand side, we got a score. Now the score is real important. It's a proprietary method of way we go through and score things. Basically, it's which ones make the most amount of money in the least amount of time with the least amount of risk. All right, and that's very important. We want to kind of have those come to the high tops. And anything you want to sort on, you just click on the header. So you want to bring all the high scores to the top, just click on the header, and it brings all the high scores. You'll notice Under Armour is a 5, and 5's as much as you can, as high as you can get. So we got Under Armour, which is a 5 between July 3rd and July 25th, 100% of the time, averages a profit of about 12% over the last 10 years. Let's see if there's any longer years. We can click on the years. Look at that. There's a 32-year trade. It's 81% accurate. So it averages 2%, but that's because we've had some ups and downs, right? But look at that, AT&T between July 25th and August 2nd, 81% of the time over the last 32 years has, been bullish. You can see that in there. Now it's ranked a yellow, which is kind of cautionary. There's probably a better trade, is what it's saying. That's going to make more money in a relatively shorter amount of time with least risk. But you can see this is a really long time frame in here, 32 years. Here's another one in here. Here's Alaska Air, which has been very good between July 28th and August 14th, 81% of the time over the last 27 years. It's been bearish. Oh, it's been going down. So that's Alaska Air's lost money 81% of the time between July 28th and August 14th. I don't know if that's because it's Alaska. Maybe that's that's one of those fundamental things. Who's going to Alaska during July and August? They lose money. But it's got a very low score. Now, just because it's got a red on here and it's a low score doesn't necessarily mean it's not a bad trade. I mean, it still falls within the criteria that we set above, 80% accurate over the last 10 years, through this window time frame. It's just it didn't make as much money as some of the other opportunities. So we can bring those scores back to the top, and you can see the high green ones are the ones that are making the most amount of money in the least amount of time. So you can sort on the score, and then you can score it on the winning ratio. And you can play with this and just find all kinds of wonderful opportunities that you might want to take advantage of and stocks that you might want to watch. Now, I'm going to switch over here to the settings tab, and you can see in the settings tab, this is where we select all the stocks. And you'll notice that in my selection, I have just the S&P 500 selected. All right. We could do just the NASDAQ 100. We could do the Dow Jones Composite. We could do, any number of things here. We can do financial sector, the healthcare sector. And then, of course, you can create your own groups, too. You can go down and create your own favorite lists. And then when you do your searches, only those particular items show up. So right now, we're just looking through the S&P 500. The more things you have selected over there, the more stocks you have selected, the longer the scan takes, obviously, and the bigger computer you need with more memory. But one of the really cool things about this is just knowing that markets have done this in the past isn't enough. It's not enough. We can come in here. What's really cool is we have this second tab in here called the neural network. And I'm just going to grab a couple of these. And I'm just going to move them over, add to step 2. And we're going to bring them over to step 2. And I'm not going to run a scan on these because it does take a while and I don't want to take your time. But what it does, it creates a fingerprint. So we'll come in here with the neural network, and the neural network will go out and it'll look back in time, and it'll look back at all the history of these individual stocks we've got selected in here. This one here is 12 years, 10 years, 10 years, and it'll create a fingerprint of all the winning trades. It'll then create a fingerprint of all the losing trades, and then it will go through and it will look at this year's market, and you can see how far out in here. It's like neural network scan and compare upcoming opportunities within the last 15 days. And of course, the smaller that number is, the more accurate the neural network can compare. But what it does, it goes and it says, okay, let's look at this year's fingerprint and compare it to all of the fingerprints in the past and see if this year looks like it's going to be a winning trade or a losing trade. And then it will rank them. It'll say, well, this is a high probability, this is a low probability, this is a medium probability, this one's a terrible probability. And it gives you a probability of this year being another winning year. Because it's not good enough that we know that these things have done it in the past, right? Past performance is not necessarily indicative of future results. The most important thing is we want to know if we think it's going to do it again this year. And so that's what the neural network does. And that's an amazing scanner in there. Goes in there and scans and compares this year to past years, and then gives you a ranking telling you how likely it is that this year is going to reoccur. And then we come in here, we've got some other steps in here, and again, I'm going to kind of skip through this and not go into great detail, but I do want to show you the functionality of some of these things. This is the portfolio view, where you can come in here and you can add things to your portfolio. And one of the important things I want to show you in the portfolio view is, see these blue headers in here? This is live data. So you can see that this trade right here, in particular, you can see the profit and loss of this particular market. It's up $645. This one's up $638. This one's up $205. This one's up $397. This one's down $152. This one's down $70. And so you can build yourself a portfolio, and you can watch the trades. And actually, if you select them, all you do is you come in, you select it, you say, oh, I want to see what this trade's doing, and you add it to the pick list. and you bring it on over to the portfolio, and it'll put it over here in the portfolio view, and it will track your profits and losses on these different trades. It's pretty amazing. And then you can, this is your pick list, and then you can come in and add them to your actual portfolio down at the bottom. And we can come in here and we can say, okay, I want to add a couple of these to my portfolio. And you move to the portfolio view, which brings them down here. And now you can build yourself a portfolio of seasonal trades. And it'll sit there and track your portfolio. And then this graph down here tells you if you create this portfolio, then you remove some of them, add a different portfolio. You end up with a different portfolio, and then you can compare this portfolio to the last portfolio. It gets a little complicated, but we covered all in the education. We show you how to do this. But you can make portfolios, and then you can compare this portfolio to your previous portfolio and see which portfolio would have actually made more money over time and which ones have the higher probability. You see your portfolio matrix down here, and you have your low end, your expected, and then your high end of your current year and previous and past and post years. And then, of course, you have the accounting window, which is this is all of your closed trades. And then it shows you all of your closed trades and all the positions that you can maintain and watch, and then your total equity curve. So that's really awesome. Another thing is we have trade alerts. So you can come in here and it'll send you an email, and you can actually you can set these all up. You can hit schedule alerts, and it says, okay, we're going to schedule these alerts. And then you can close TradeMiner right down, and it will send you emails and remind you that there's a trade coming up tomorrow that you are interested in taking a look at. So it does all this really cool automated stuff behind the scenes. You don't even have to have TradeMiner open. And of course, we talked about things in the education is where all the videos are that teaches you how to use TradeMiner. Now, I want to show you just real quick before we move. We also have here's the futures version, and why don't we go ahead just real quick and we'll do a run on the futures version. This is looking at the commodities and futures, and you can see in here this is the June contracts. We can kind of sort those, bring some of the high scores to the top, and you can see in here U.S. Treasury bond. Here's sugar. Look at sugar. Sugar starts on June 4th. To June 30th, 92% of the time over the last 13 years has, on average, a return on margin has been 108% on average. That's sugar between June 14th and June 30th. So that's pretty neat. And what's amazing about this is some of the financials, the 10-year T-bond and the 30-year T-bond, T-note. These are very seasonal, believe it or not. Look at this. This is the U.S. 10-year T-bond. Between June 23rd and August 15th, 82% of the time over the last 11 years has been bullish with 166% return on margin. That's pretty amazing. So we have traditional commodities in here: corn, wheat, soybeans, live cattle, feeder cattle, all those kinds of really neat stuff. Plus we got traditional futures in here: gold, silver, platinum, palladium. We got all the neat stuff, all the currencies, the E-mini S&Ps in here. You can see in the settings all the different things. We got all the currencies are over here in the futures market as well, because the futures market does have the currencies. So you can see all those in here, and you can see pretty much cattle, wheat, corn, oil, natural gas, crude oil, Russell S&P, everything you can imagine. Everything you can imagine from all the U.S. exchanges is in here, and we can do those different searches and find out those trends are going to occur. And then we have, very quickly here, we have the Forex market as well. And this is strictly Forex, just the currencies. We have the 24 biggest currency pairs in here. But you can see, again, with the currencies, the same types of things. We can go on a score and see what's coming up next on the currencies. Now, I'm going to drop that down back, and just take real quick look at the slides once again. At this point, you're probably wondering how you can get your hands on a copy of TradeMiner Pro for yourself, and what kind of special offer we're going to be making for you during this presentation. So here we go. TradeMiner Pro Stocks, Futures, and Forex regularly sells for $697. You get all three versions for $697. You go out today, right now, and buy it off the website for that price. But hold on, because I'm about to make you that special discounted webinar offer. If you buy TradeMiner Pro today during this special presentation, I'm going to offer you some additional bonuses you're not going to want to pass up. All right. First, I'm rolling out a new Elite Club membership program. So this is where I'll personally be working with you personally one-on-one for anyone who joins TradeMiner Elite Trading Program today. So let me quickly give you the details about this little program. But let's first talk about what you get with the software. When you join my new TradeMiner Elite Trading Club, you'll receive TradeMiner Pro for all three markets, stocks, futures, and Forex. TradeMiner Pro includes the entire historical market price data bank, which goes back, in many cases, over 50 years. You saw some in there that were going a long ways back, 35, 40 years. We got some in there that go over 50 years back. Plus, we're including the entire first-year custom-tailored streaming daily market data feed for free. Now, the reason I say it's custom-tailored streaming market data feed is one of the questions I always get is somebody will say, I already have a data feed. Can I just feed it into TradeMiner? And the answer to that is no, you can't, because it's a custom-tailored data feed just for this particular type of research. So it's what's going in, and it's what's keeping the portfolio up to date, and so you can see the profits and losses in the system as I showed you earlier for each trading day. Now, full disclosure, next year, if you want to continue with the program and keep the software current, there will be a small annual data renewal fee of $149. That's once per year. All right, a once per year data fee, which keeps the historical data bank up to date, as well as provides your daily market quotes. But again, I'm including this for free for the entire first year. So you'll receive 16 TradeMiner trading videos. So these are the TradeMiner Elite trading videos where I walk you through every step of how to find the very best seasonal trading opportunities for your portfolio. Plus, if you have any technical questions whatsoever, you can call our toll-free 800 tech support line for immediate help. Now, that's just the software side. That's what we're doing for this special promotion for the software side. And for the Elite membership privileges side, as a member, you'll be invited to my private live training webinars where we'll discuss all aspects of trading, including TradeMiner Pro and how to integrate it into your daily trading strategies. You'll have unlimited email access to me personally if you have any trading questions about TradeMiner Pro, not tech support questions. That's handled by the tech support team. But if you have trading questions, I'll personally be here to help you. You'll also receive my weekly What's Hot and What's Not market analysis videos where I discuss the current market opportunities and where I let you see what markets I'm personally watching and trading and how we're going to integrate TradeMiner into those opportunities. Plus, as a bonus, I'm going to offer each new member a one-on-one conversation with me where we can talk about your trading goals and aspirations, and maybe I can help you give you some direction on how to best reach those goals. All right. So here's TradeMiner Elite membership privileges. Let's see, where did it go? Okay, so here's the offer. What's the offer? Again, you could go out right now on the web and you could purchase TradeMiner Pro stocks, futures, and Forex for $697. But if you join my TradeMiner Elite Trading Club today, during this special presentation, which includes the software, plus all the benefits I just mentioned, we're making this special one-time offer for $497. All right? And there are no ongoing monthly membership fees. As long as you own TradeMiner Pro and maintain your active annual data subscription service, we consider that is your membership fee. So you're in and you're golden as long as you keep your data service up to date. And that's about as good as I can get it, folks. I don't know what else I can throw in there at this very low discounted price. Again, the data service fee for the first year is thrown in there for free for both the updating of the historical databases up to date and for the next year's streaming quotes. So that's all thrown in there for free. And we're actually discounting it from $697, which is the regular price out on the web, down to $497, which is this webinar price. Plus, we're throwing in all this extra stuff. So I don't know what else I can. Let's see. We do have one more thing. Hold on. Dr. Scott Brown is an internationally recognized PhD in finance. He's published numerous books and white papers on trading the financial markets. He's also an active trader and university professor. He's currently teaching graduate level investment courses. Doc Brown is also one of the co-founders of TradeMiners, as well as one of my good friends, and he's one of my trading buddies. Doc Brown has agreed to offer for free to anyone who joins the TradeMiner Elite Trading Program today his recently published course titled Trading Seasonal Price Patterns in Stocks, Futures, and Forex. This course alone, Doc Brown regularly sells for $199, and he's giving it away for free to all new TradeMiner Elite Club members. So I'm sure the next question is, how do I join? So here's how we make that happen. If you would like to pick up your copy of TradeMiner Pro, join the Elite Club where you get access to me to help you learn how to use it. Very simply, get the software plus all the bonuses, join my trading club. All you have to do is visit my secret, hidden, unpublished, registered page. Now you have to, this is secret, unpublished, because it's not out there for anybody else. This is just for you guys. The problem about making something just for you guys here at Cyber Trading University, this is a special Cyber Trading University offer. I have to put it somewhere where nobody else can find it. So because I have to put it where nobody else can find it, you have to type in the address on the website. So here's the link. Now you have to type it in your web browser exactly as you see it here. It's www.trademiners.com/elite.htm. So make sure you write that down, because you got to have that address to get to it. Otherwise, you won't find this offer anywhere else. Like I said, this is just specifically for Cyber Trading University people. Notice that that's TradeMentors.com. TradeMentors is our club site, so you'll need to go to that site, TradeMentors.com, elite.htm, to register. Or if you have any troubles getting the website up, feel free to call our toll-free line, 800-862-7193, extension 2, and make sure you mention that you're trying to join the Lan Turner's TradeMiner Pro Elite Trading Club from today's live webinar. And make sure that they give you the $497 price, because they do not generally give $497 for TradeMiner. So you have to make sure you tell them that it's part of this club group. Now remember too, we're offering you a full 30-day software satisfaction guarantee. If you join my club and you pick up the software and you're not 100% completely satisfied with TradeMiner Pro, if you don't think this is the neatest thing since sliced bread, you can return it for a full 100% refund, all $497, no questions asked. And the reason I say software guarantee is because even if you return TradeMiner, you can keep Doc Brown's $200 course as a free gift from us just for giving TradeMiner Pro a try. So I'd like to invite you to join me. I'd love to work with you. And if you have any questions, I'm here to answer anything you might want to ask. And you're not seeing the link showing. Let me see if I can bring it up. Let's see. See if I can type it in here for you. All right. Just click that link. I just put it into the chat window. See if that helps. The 800 number is 1-800-862-7193, extension 2. And that should be there on the... Are you not seeing this slide? I'm surprised. I want to go to slide 29. This is not coming up. We're having a little... There, how's that? Does that help? Okay. That was the slide that was supposed to be coming up when I was talking about that link. Is that better? Can you see the link? Okay. Did you guys see that that Doc Brown slide come up where he's giving away that $200 course? Did you guys see that? Giving away that $200 course. Or anybody picks that up? Okay, Steven says yes. So there's the link. Sorry if that slide didn't come up. Little technical difficulty here trying to get that out there for you. If you look into the chat window, you can see, you can just click that button and that should take you over there. So does anybody have any questions? Any questions you might want to ask? I've seen a couple of questions come through earlier. I got a couple of questions that most people ask. Um, one question that I get all the time is, what computer and operating system does TradeMiner run on? TradeMiner was designed in a language known as Java. Therefore, any platform including Windows, Mac, or Linux, all of which can run the Java environment and can run TradeMiner Pro. You just have to make sure you have the latest version of Java. If you have any troubles getting the software installed, don't hesitate to call our toll-free tech support line. That's what they're there for. They're just guys sitting around waiting for you guys to call. Do you propose options strategies based on the signals? Personally, I like to use TradeMiner to help with options. Yes, in fact, in the stocks version, all of the stocks are listed in the help section, or not in the settings section. There's a whole column on whether the stocks are optionable or not, and you can actually sort on it, and you can select them and say these are the only ones I want to sort on. The ones that are optionable. And yes, a lot of traders use TradeMiner to trade options, and that's it. TradeMiner has changed the way I trade. I mean, I don't know how anybody can trade without it. I don't know why anybody would want to. If you know that a market has a tendency to 90% of the time rise in price during two specific dates, I want to know that. You know, I want to know that. So one of the questions is, do you have to pay separately for the data services? TradeMiner Pro does not have a monthly data service fee. The price of the software includes all the historical market data necessary to perform the scans. The neural network scan, along with the portfolio view, do require a daily market data feed, but that service is included as part of the initial purchase price for the first year. There is a small, as I mentioned before, there's a small, let's see, where's my notes? There's a small yearly historical database maintenance fee where we update the historical database with the past year's data so you can continue getting the latest results. This fee also includes the upcoming yearly data stream as well. And and I think I had on there the data fee, if my memory serves me correctly, is $149 for the entire year, which does both the live quotes as well, or the streaming quotes, as well as the historical database update. And again, that's once per year, $149, and it's included for the first entire year. So again, if you're ready to join, visit our secret web address, www.tradementors.com, elite.htm, and you can download the software right now. Start using this today. Okay, what markets are included in TradeMiner? Here's another question, what markets? With TradeMiner stocks, you get the S&P 500. I kind of covered this a little bit when we were looking at it. NASDAQ 100, the Dow Industrials, plus many additional popular stocks, as well as ETFs. So we've selected all the very best stocks with high dividend yields, high volume, and options trading capabilities. In the futures version, you get almost every single commodity you can imagine from all the major U.S. exchanges. It's very, very comprehensive. And on the Forex side, you get the top 24 commonly traded currency pairs. Also, new markets are being added on a regular basis as the historical data becomes available. We've been doing this for years, guys, primarily for ourselves. It's a very robust system. So again, to join up, visit our secret web address, tradementors.com/elite, to get started. Glad you enjoyed it. Thanks, Leda. Hope it was something that you can use. All right, here's another question. Am I correct in thinking that all you have to do to trade these patterns is to buy on the open and sell on the close? The full answer to that question, Rob, is that there are actually many ways to use TradeMiner, and yes, of course, you can obviously use it that way. That would be considered the simplest and most straightforward methodology. During the Elite Program's educational guides, videos, and webinars, we are going to be going deeply into this area as to the best ways to implement these patterns into our trading strategy. That's a huge part of what we'll be doing and discussing and learning together. With that said, TradeMiner is a fundamental tool which points out areas in which markets have consistently produced similar actions or activity over a historical period of time. Personally, I believe that both the technical as well as the fundamental nature of markets is key to reaching our overall long-term trading goals. And melding the two together is how we come up with that, what I mentioned before, 1, 2, 3 solid knockout punch. And TradeMiner is the fundamental half of that formula, or what I call the setup. But then I like to trade the technical side of the market, or the technical side of the formula as well, and to me that's where we get the trigger. So there's a lot of different ways of using TradeMiner, including the options as mentioned before. And again, we'll be covering all of these in the educational component of TradeMiner Elite program. So once again, swing by tradementors.com, elite.com, or call our 800 number, and somebody can take your order there if you want to get in that way. Can I select a specific stock, commodity, or Forex pair in TradeMiner to tell when the best time of the month or year is to trade? And the answer to that is yes. I tried to show you that a little bit during the demonstration, but we'll go into that in much greater detail during the live webinars and the video education. But the answer to that is yes. You can specify any particular symbol in the database, and TradeMiner will kick out the results for just that symbol for the entire year. So here's another good question. Is this a plug-in to another program like an EA or an expert advisor plug-in to some other package? No. TradeMiner is not a plug-in to some other package. You do not need to have any other software program to use TradeMiner. It is a standalone application. It's a professional level research tool designed for serious individual traders, corporations, and hedge fund managers. There's nothing else you need to buy or do to use it. Here's another question. Do you have a real audited registered track record for TradeMiner? The fact is that TradeMiner is not a formal trading system being traded under management. TradeMiner is a very powerful and unique research tool. It pinpoints where the historical trends and market cycles have consistently occurred over time. You can use that information however you see fit. The historical results speak for themselves and are in essence exactly what you're asking for, I believe. If you're looking for a track record, that's what Track and Trade shows, or TradeMiner shows you, is the track record. So let me explain something here. What I like to do to use TradeMiner to help me identify a stock, futures contract, or a Forex pair that's been bullish or bearish during a specific time period. Usually that's like right now, because I want to trade right now, right? I'm trading today. I want to know right now what to trade. Then I'll use that information as a fundamental basis along with my technical trading tools to help me make a better informed decision. It helps me know which technical triggers to take and when to take them and which directions, bullish or bearish. So that's how I use it. I use it as the fundamental side, and then I use the triggers to help me decide when I want to enter the fundamental trade. How can TradeMiner help me? I'm a day trader. I talked about that a little bit earlier. I'm a day trader too, and as you know, a good day trader will always establish the underlying overall long-term trend of the market. And then we only take trades in the direction of the overall fundamental trend. Well, TradeMiner can help establish what that is and when that timing is. Trading is all about timing, and TradeMiner is, it's basically the ultimate timing tool. So for example, let's say TradeMiner identifies a 3-day window within the Euro FX that's been bullish 90% of the time during the past 10 years. Well, for me as a day trader, I might want to take on more risk and be more aggressive with my bullish positions during that time period. Where if I get a bearish trend signal or a bearish trade signal, I might be less aggressive, or I might not even take the trade at all if it's going against what TradeMiner says. So TradeMiner makes me feel like I have kind of an unfair advantage over other traders. It's like counting cards. You ever talk about these guys at MIT, right, who go down to Las Vegas and they count cards? Well, they're counting cards for the purpose of trying to put the odds in their favor, and when the odds are highly in their favor, they start betting big. Well, that's kind of the same thing that TradeMiner does. It kind of puts the odds in your favor, and once you finally find or get yourself into a situation where the odds are highly in your favor, you kind of might take advantage of that and start betting a little bit bigger, being a little bit more aggressive. Another question, how long have you been in business? We have been in business for over 20 years. We're not going anywhere. We recently received an award for being one of the top 25 software developers in our industry, and we fully expect to be around far into the future. Gecko Software's flagship product, Track and Trade Live, has also received Stocks and Commodities Magazine's annual Reader's Choice Award 6 times. So we've been doing this for a while, folks. We're all pretty well established, and we're not going to go anywhere. So again, join up. Go ahead, visit that secret registration link, and let's get started. Clark's asking, counting is hard work. You deserve to be paid if you can count. Not sure what you mean by that, Clark. Pamela says, can you repeat what you said about the red, green, yellow signals? Oh, we have down the left-hand side, you noticed in the software, we had, cards. Oh, Clark's counting cards. Okay, I get it, Clark. We have the score. And the score is red, yellow, and green. So everything that comes up in the software meets the criteria that we specified in the initial scan, right? But then we go through with a proprietary math formula and we score those different entries. And we say, okay, the ones that are green are generally the ones that made the most amount of money in the least amount of time with the least amount of risk. Through our formula system, we decide that those seem to be the best opportunities to take, and those would be the ones we would focus on most. And then we have yellows, and yellows were pretty good trades, but the green ones were better. And then the red ones are for some reason we're not real happy with these. They meet all the criteria, but maybe it was because one or two big years kind of threw it off and kind of made it, kind of threw it out of the norm. We want it to be kind of a really nice natural trend, and so things that were more natural and nice trends we scored more highly. And so that's what the red, yellow, and green is. It's kind of a scoring system. It helps you determine which ones are the best opportunities of the ones that showed up in the scan. Here's another question. Do I need to open an account with a broker? The answer to that is no. It is not necessary that you open a trading account with any particular broker or brokerage firm to use TradeMiner. TradeMiner does not execute orders. It's not an order execution platform. It's just research. It's a research tool used by traders and market analysts to help them refine their trading decisions. Again, it's not tied to any brokerage firm. Are Canadian stocks included? Abe says, no, they are not. These are just the U.S. exchanges. We are actually working on creating foreign versions for Canada, Australia, and the UK for those exchanges, but we have not got those pulled together yet. All right, everyone, we've pretty much run out of time. I want to thank you for coming by, and please call our 1-800 number if you have any further questions. 1-800-862-7193, extension 2, and you can get any questions you have answered about trade mentors or TradeMiner, about TradeMiner Pro and the Elite Club. And I hope that, to see you in the club, I hope you guys will come over and join me, and will enjoy the software as much as I do. It's absolutely changed the way I look at the markets and changed the way I do my trading. So I hope it works as well for you as it has for me. And I wish you the very best. And I want to thank once again Cyber Trading University for inviting me over. They are some fantastic guys. All right, guys, you take care, and we will see you. Hopefully, they'll invite me again, and we'll see you next time.